Hey guys, hey there, GammaEdge here coming at you the pre-market prep for May 30th, 2025, last trading day of the month. Let's cover it in 5 minutes. So if you watched our post-market video last night, you already know the trend of the market trend model. In the short term, sideways to lower. Bulls, we want to see a reversion higher, railroad tracks higher, cumulative tick higher. We want to see supportive buying. If you're a bear on the market, you want to see a continued weakness, but just keep in mind this is simply a short-term pullback in the context of a stronger, longer-term uptrend right now. Again, when you're trading intraday, this is the key thing that we want to be leveraging. By that, understanding if we have buying or selling, and if that is strong and sustained throughout the session or not. So going through pre-market prep real quick, you can see we have very detailed write-up every day. First off, Paul, happy anniversary. Second, just a broad overview. I'm not going to go to this in detail. You guys can read it, but looking at SPX-A, call dominated structure looks strong. SPX-P full complex, fairly strong structure looks strong as well. So a market trend model, very constructive, more or less constructive, a little bit of weakness in the short term, but it looks fine. And SPX-A, SPX-P full complexes look good. Now moving on to SPX-0 DT structure. So here we have the DEX transition zone, which is the blue, 5930, 5895. You can see this is the chop zone. Above 5930, we have the top of the junk consider range at 5935. So interested in getting more longer above 5935. First target there would be 5950, A, because that's a key psychological level, and B, there's a decent amount of, distribution speculation at that strike. So what that means is we're going to need to see a lot of volume to overcome that strike. So that's kind of a natural monetization level. But 5950, we need to see that continuation of call buying coming into the market. We see that via the volume intraday volume analysis in the market trend model. The bell's about to ring here, so I apologize if you hear a ding, ding, ding. And then we have the bottom of the DEX transition zone, drunken sailor range, 5900, 5895. Sorry, one thing I should note is 5925. Strong negative delta strikes, right? That's going to be suppressive so long as we're below that, meaning negative delta is going to be added to the complex. However, if we're able to flip that strike, that's going to help be supportive to help elevate us higher. Given the short puts sitting there, right? And we have that all detailed out for you guys in the write-up as well. And then below 58.95, that is where we expect to see further weakness. And just like we were to the upside, to the downside, we want to see that selling come in, put speculation coming in below, trending lower, market trend model. In that case, would be seeing filter tick selling as well. First point there would be 58.50 again, psychological level, good bit of distribution there, natural monetization point, all that good stuff. So structure, again, very, very clean today. Key transition zones are outlined for you. Just looking at this real quick. Hold on. Yeah, so we just opened. We're opening right below the bottom of the drunken sailor range right now. So the bulls, we want to recover this zone. But if not, we could see further downside. Continuation of yesterday's kind of weakness. So things to keep in mind. But with that, good luck to you guys today, and we'll see you in the Discord. Thanks. Bye.